and something happens that has nothing to do with money. Welcome to MarketIQBasics. A voice. Quiet, immediate, certain. Of course it did, because you're not good enough for this. That voice is not the market talking. That is something much older, and it is costing more than the loss on the screen. The confusion. Somewhere along the way, most traders make an unconscious trade, one that never appears on a chart. They trade their identity for their P&L. When trades win, they feel capable, confident, like someone who has finally figured it out. When trades lose, they feel exposed, stupid, like a fraud who was never supposed to be here. The problem is not the loss. The problem is what the loss means to them. Because when a losing trade becomes a verdict on who you are as a person, you are no longer trading a system. You are defending your self-worth against the market. And that is a battle nobody wins. Why this happens? Human beings are meaning-making machines. The mind cannot sit with a neutral event. It has to build a story around it. And the story most traders build when they lose is always the same. It is a story about them, about what the loss proves, about what it confirms. That story is not true, but it feels true. And feelings in trading are expensive. A single trade proves nothing about ability. Professional traders, the ones who have been doing this for years, who run structured systems with defined edges, they lose constantly. 30–40% of their trades end in a loss. They know this before they open the position. The outcome of one trade is almost entirely irrelevant to the question of whether they are good at this. What matters is not the trade. It is the process behind the trade. The separation. Here is what needs to happen. And it is simple to say, genuinely difficult to do. Separate what you did from who you are. Did you follow your system? Did you respect your stop? Did you size correctly? If yes, then the outcome of that trade, whether it wins or loses, is not a reflection of you. It is a reflection of probability, of variance, of market conditions outside any human's control. You are the process, not the outcome. The trader who internalizes this stops trading to prove something. They stop revenge trading to recover a reputation that only exists in their own head. They start treating every trade like what it actually is. One data point in 1,000. No more, no less. The truth. The trades will come and go. Wins, losses, red days. None of them define the trader sitting behind them. What defines a trader is whether they show up tomorrow with the same process, the same discipline, the same risk management, regardless of what yesterday looked like. That is the only thing the market will ever reward. Not ego, not emotion, consistency. At MarketIQBasics, we are here for the real work, the psychology, the process, the honest conversation about what trading actually takes. Subscribe for more every week. And whatever today's trade said about you, they were wrong. See you in the next one.